Unlocking the mystery of debt terms in English. Hello, dear friends and language enthusiasts. Today, we're going to demystify an often confusing but crucial phrase in the financial world, debt terms. Whether you're taking out a loan, using a credit card, or just want to understand the financial news, knowing what debt terms mean is incredibly important. So, let's get started and break down this concept into simple, easy-to-understand language. Debt terms refer to the conditions and agreements under which money is borrowed. They are the rules of the game in the lending world. These terms include the amount of money borrowed, also known as the principal, the interest rate, the repayment schedule, and any other conditions that the lender and borrower agree upon. Think of it like a recipe for a loan. Every ingredient must be clearly stated for the final dish to be successfully made. There are several key components that usually come up when we talk about debt terms. Principal. This is the actual amount of money that you borrow. Interest rate. This is the extra percentage of the principal that you'll pay for the privilege of borrowing the money. Repayment schedule. These are the details about how often you'll make payments, monthly, quarterly, etc., and for how long. Maturity date. The exact date by which the loan should be fully repaid. Default penalties. These are the consequences if you fail to meet the terms of the debt. Understanding debt terms is vital because they affect how much you end up paying back. Better terms can mean less stress and a lower overall cost. For example, a lower interest rate or a longer repayment period can make a big difference in your budget. It's also about being informed and avoiding any surprises during the repayment process. Yes, you can often negotiate debt terms. This is why it's essential to understand them fully. You can negotiate the interest rate, repayment schedule, and even some fees. Knowing these terms well puts you in a better position to advocate for yourself and secure a deal that's more favorable. The debt terms can vary widely depending on the type of loan. For instance, mortgages, long-term loans with secured debt against property, student loans, may have different terms based on whether they are federal or private loans. Credit cards often have higher interest rates and different repayment terms compared to other loans. I hope this video has shed light on the often complex world of debt terms. Remember, when you're dealing with loans or credit, always read and understand the terms thoroughly before committing. If you found this explanation helpful, please give us a thumbs up, and don't forget to subscribe for more language learning content. Until next time, keep learning and stay curious.